A whale just transferred almost $750 million in Bitcoin. Wait, does this mean he's selling it? Actually, the complete opposite. Since the crash of Bitcoin, the major whales, the biggest players in the games with between 10,000 and 100,000 Bitcoin have been accumulating while everybody's been panic selling. Now, on top of this, Bitcoin's price versus user growth has been growing at a staggering rate. Over 1.2 million users were added in just the last 30 days, and this does not include off-chain users on exchanges. Okay, so why does this matter? It's because the demand for Bitcoin is now here with adoption. And with almost 24 Bitcoin ETFs now piled up on the SEC's desk, Gary Gensler the SEC chairman came out at the Aspen Security Forum and mentioned that they are looking to approve a Bitcoin ETF very, very soon. On top of that, very, very soon, every single user on Twitter may be connected to a Bitcoin Lightning Network wallet, which is approximately 206 million users. But the biggest adoptions coming from our banks, where over 55% of the top 100 world banks now adopt and actually allow the exposure to Bitcoin and other crypto assets. Not to mention El Salvador and all these other countries following their footstep, from Paraguay to Uruguay to Argentina, all looking to pass legislation for Bitcoin. Now right here, this is the illiquid supply for Bitcoin. As you can see, even though we're sitting at about $47,000 Bitcoin at this moment, we are at the same supply on exchanges as we were when Bitcoin was at $64,000. This means the supply on exchanges is decreasing and the selling pressure is decreasing. Now, this is caused from whales picking up over 290,000 Bitcoin over the last 3 months and accumulating and putting it into their long-term positions. So what does this mean for Bitcoin? Well, it means once retail investors or short-term holders come back to the market and want to flood into Bitcoin, there's going to be a lot less supply, meaning the demand's going to go up and the price is going to shoot through the roof. This is also known as a negative supply shock. So I just want you guys to look at all this data and ask yourself one thing. Is it worth it to try to time the market? Or is it worth it to have just time in the market, meaning dollar cost average throughout time? Because the adoptions here, guys, this is not like any other cycle. We have institutional adoptions, financial institutions now buying into crypto and offering it to their clients. If an ETF is launched, asset managers are going to be opening that up to millions of users and trillions of dollars. And on top of it, we have countries now adopting Bitcoin as legal tender. Now, for day trading, that is a whole nother deal. I just want anybody that's watching this that has never taken a step into the crypto space or has been only investing in shitcoins to wake up and realize there's a lot more to this. Don't get left behind.